Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Late last year, a few bullish patterns started to emerge. It eventually led to a move up towards the combined resistance in mid-April this year of the 2012 high at 241.05 and the November 2011 high at 243.40. On the way up, prices punched up through the November 2014 high at 201.35, the 50% Fibonacci lines of the February 22 to January 23 move at 201.70, and the big 2011-2019 move at 198.30. Then also the April 23 high at 204.90, the October 22 high at 216.25, till peaking just over the November 2011 high at 243.40. The market then headed lower, all the way back down to the combination of the bright red declining neckline of the April to May 2022 reverse head and shoulders pattern, currently 196.65, plus the 50% Fibonacci line of the big old 2011-2019 move at 198.30. And most importantly, the very slowly rising medium moving average, currently at 202.80, where prices stabilized during the middle of May and turned back upwards. 9 weeks ago, I had a look at the longer term charts here, and this is what I saw, and I quote: "The key move here over the 50% Fibonacci line of the 2011-2019 move at 198.30. This has seemingly validated the action since September 2022 to date as a possible, so it's September 2022, it's a long-term pattern, as a possible double bottom, Adam and Eve type. Thus, potential targets for such a pattern topside would be a primary target X1 in the 235 even area, with a secondary hard to reach target X2 up in the 250-160 area. These are early days, but that is what it's looking like right now." End of quote. Well, prices reached the primary target X1 in the 235 area, exceeded them even. However, target X2 up at 250-160 has not been reached. And for now, I've decided to retire this harder to reach secondary target from my daily chart. This all leads to where we are now, and I have a conundrum. You see, to me, the action since the start of the year looked like an inverted diving board pattern. That is a flat run in, shoot up, drop, and now the climb out, but inverted, obviously. The only issue of this is there is no such pattern. I can't find one in my reference books. You see, you can have a diving board pattern with a V bottom or a V top, but not with a run up from a fairly flat congestion area as we have seen earlier this year. This leaves me with nothing other than a V top pattern, which I feel is only half the story. Anyway, this V top stroke inverted diving board pattern is over, and prices created over early May a small double bottom pattern. The ambition of this pattern was quite low, only up as far as the 2016 area, which we achieved 4 weeks ago. 2 weeks ago, I was prompted to draw a bullish Andrews pitchfork with this action since mid-March to early May. At first glance, it looked good, but the move down last Monday breached the lower tone, and I chose instead to draw the shallower bullish shift pitchfork in dark blue for the same move. From this, you can see how the middle tine, currently at 232.60, working initially with the congestions at 220.90, 224.40 to 226.45, 229.15 to 230.10, and ultimately the 2012 high at 241.05 managed to erode the market enough to stop prices, and dipped enough that 2 weeks ago we tested the very recent 50% Fibonacci line at 218.65. And they're even now very much threatening to form a double top. The question on the validity of double top pattern is still open, but is a genuine, possibly a market-defining question for the rest of 2024. The only other featured wash is the rising green short-medium moving average, currently at 216.90. I have mixed feelings about this support, as it has been during 2024 an attractor and most recently a cap. So it's important. I'm just not sure as to whether its role as a support will be good enough. London coffee. 15 weeks ago, prices shot up through the late January to early March bear channel line, prompted by the rising bright green highlighted short-medium moving average, currently at 38.65. The market took its own sweet time, but it did in the end exploit the upside. I said 12 weeks ago, and I quote, "It nevertheless still lays out all sorts of possibilities topside." Thus, if we look at the bear channel as a bullish half rotation, then we need to look at 2 points from where to start measuring from. First is the January low at 27.44. The second is from the mid-December 2023 start of the rally in the 25.20 area. Thus, for the first pattern, we have a potential target X in the 34.80 area, whilst from the second origin, you could see it up as far as potential target X1 in the 3700 area, well up and off the top of my daily chart. End of quote. A few days after my commentary, target X at 34.80 was reached, and soon after, the harder reached target X1 in the 3700 area was also achieved. Prices peaked 8 weeks ago and then turned lower once again, this time with a greater force, adding a changeover gap in early May that has since been filled and dropping down as far as the combined January high at 32.62 and the slowly rising medium moving average currently at 35.64, where once again the market stabilized. Towards the end of May, prices started rising again with a breakout over the green short-medium moving average that had corralled the upside in early to mid-May. It was enough of a breakout higher that prices 2 weeks ago made a new all-time high of 43.94. We have since come off a little. All this action last week allowed me to draw a bullish pitchfork for the late February, early May activity, and unlike New York coffee, it is not the shallow bullish shift pitchfork, but the more acutely bullish Andrews pitchfork, highlighted in dark blue, that I suggest is key to this market, especially the lower time, which is currently at 37.86. The market is at the moment in between the middle time above, currently 43.91, and the lower time below. For a second consecutive week, I suspect this acute bullish Andrews pitchfork is important, and it may hold the key to what is happening next. I tried just for size the bullish shift pitchfork once again, much as we have the one in New York coffee. Whilst it fit, it doesn't tell any story. Not yet. And I think for now the bullish Andrews pitchfork does, and that's why I'm going to keep with that for the moment.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.